Hello everyone and welcome back to Explain the Charts. It's July 30th, 2025, and all eyes are on Microsoft as the company is set to release its fiscal fourth quarter earnings report after market close today. This is a pivotal moment for Microsoft, with market participants eagerly awaiting insights into its performance, especially in key growth areas. Analysts are largely bullish, with 60 out of 65 rating it a buy and an average price target of $556.64, according to FactSet, implying significant upside from its current levels. The focus remains squarely on Microsoft's flourishing cloud platform, Azure, and its groundbreaking artificial intelligence offerings, including Copilot, which are expected to drive robust revenue. Recent developments, like advanced discussions with OpenAI and a nuclear fusion power plant project for data centers backed by OpenAI CEO Sam Altman, underscore Microsoft's aggressive pursuit of cutting-edge technology. It's important to remember that Microsoft stock has already outpaced the S&P 500 significantly this year, rising 22% compared to the index's 9.4% gain, and currently trades near its 52-week high of $518.29. However, looking back to April 2025, we saw the stock face considerable pressure, primarily due to an escalating trade war with China, where President Trump announced increased tariffs. This past event serves as a crucial reminder of how macroeconomic factors can swiftly impact even a tech giant like Microsoft, leading to temporary pullbacks in technology investments and even job cuts, as reported by Business Insider. Now, let's turn to the charts and see how these narratives align with the price action and what past movements can tell us about potential future trends. Viewing the daily chart, spanning from March 2024 to yesterday's close on July 29, 2025, we can observe a strong overall uptrend, albeit with notable corrections along the way. The price has shown remarkable resilience, consistently finding support after pullbacks, a sign of underlying strength. Let's zoom into a specific period to highlight the distinct impact of that trade war news. Notice the sharp decline that occurred from April 4th to April 19th, 2025, where Microsoft fell significantly from highs around $428 to lows near $397. This specific downturn directly corresponds with the escalating US-China trade tensions we just discussed, demonstrating a clear and immediate correlation between major fundamental news and market reaction. The low around $397.77 established a significant support zone during that downturn, a level that traders should note as a potential retest point in a severe bearish scenario. Since then, the stock has staged an impressive recovery, building momentum and climbing steadily back to yesterday's closing price of $512.57. Key resistance levels on this daily chart now include the recent 52-week high of $518.29, which represents the immediate hurdle for a continued rally. A decisive break above this, accompanied by strong volume, would indicate robust bullish momentum and could open the path towards the analyst price targets. Conversely, immediate support appears to be forming around the $505 to $500 psychological level, which previously acted as resistance in early July and could now serve as a strong floor. Further down, the $480 to $490 range, evident from mid-June's trading, represents a more substantial support area if the stock experiences a deeper correction, potentially due to earnings disappointment. Transitioning to the 1-hour chart, which provides a closer look at the intraday price movements from last week, we can identify shorter-term trends and volatility. It's important to note that the latest data on this hourly chart concludes on July 23, 2025, meaning we're looking at patterns leading up to the most recent daily closes. Across this time frame, we can see periods of clear consolidation, where the stock traded sideways, often followed by distinct breakouts or breakdowns, frequently on increased volume, signaling shifts in short-term sentiment. For instance, around July 17th, the price saw a notable surge, moving from approximately $505 to over $512 within a few hours before consolidating, which demonstrated significant buying interest. This short-term rally indicates a willingness of buyers to step in and push the price upwards, even in intraday trading. However, some pullbacks also show a quick retreat to nearest hourly support, suggesting that profit-taking or short-term bearish pressure can emerge swiftly. Analyzing these hourly swings can help identify potential entry or exit points for day traders seeking to capitalize on short-lived momentum. Now, let's get even more granular and examine the 15-minute chart, specifically focusing on the trading activity from yesterday, July 29, 2025, from the afternoon into the evening, providing the most current view of price action leading into today's earnings. Here, we can observe very short-term support and resistance levels that are critical for day traders and for understanding immediate pre-earnings sentiment and positioning. Looking at the period from approximately 1300 hours Universal Time Coordinated to the close at 23:48 Universal Time Coordinated yesterday, the price initially saw a noticeable dip from around $515.50 down to $511.56, indicating some late-day selling pressure or profit-taking. However, it quickly recovered some ground and then consolidated within a relatively tight range of $512.50 to $514.50 towards the market close. The relatively lower volume observed in the later hours of yesterday's trading suggests that many institutional and retail investors are holding their breath ahead of the earnings call, leading to cautious positioning and reduced directional bets. Any price movement outside this established $512.50 to $514.50 range today, especially on high volume, could decisively signal the immediate post-earnings direction and attract significant follow-through. The lack of extreme intraday volatility late yesterday, despite the upcoming major announcement, indicates a market largely poised for a reaction to tonight's news rather than being driven by existing internal momentum. So, what are the reasons to be bullish or bearish on Microsoft right now? On the bullish side, the overwhelming analyst consensus for a strong buy and an average price target significantly above the current price are strong indicators. Microsoft's consistent growth in Azure and its leading position in the burgeoning AI market, exemplified by Copilot, provide robust fundamental support. Furthermore, strategic partnerships like the one with Helion Energy for sustainable data center power signal long-term vision and innovation. Historically, Microsoft has proven its ability to recover from market headwinds, making it a favored long-term growth stock. A strong earnings beat and optimistic forward guidance tonight could easily propel the stock towards new all-time highs, potentially breaking the $518.29 resistance and eyeing the $550 mark. However, bearish arguments also hold weight. The stock is currently trading very close to its 52-week high, meaning much of the anticipated good news might already be priced in. Any slight disappointment in the earnings report, even if it's just meeting expectations rather than beating them, could lead to a sell the news reaction. The past impact of macro events, such as the trade war-induced decline, highlights the vulnerability to broader economic slowdowns. Concerns about potential job cuts and slowed technology investments, even if temporary, could dampen investor enthusiasm. A miss on earnings or cautious outlook could see a rapid descent towards immediate support levels. To recap, when deciding when and at what price to trade Microsoft, MSFT, several key price levels and market conditions need very close monitoring, especially with earnings after hours. The immediate critical resistance to watch is the 52-week high at $518.29, as a break above this would confirm significant upward momentum. A decisive break above this, especially on high volume after earnings, would strongly reinforce a bullish short-term outlook, with potential targets around the analyst average of $556.64. On the downside, initial short-term support is around $510 to $511, as observed on the intraday charts yesterday, which represents the first line of defense. A more significant support zone on the daily chart is the $500 psychological level, a round number that often attracts buying interest, followed by the $480 to $490 range, which proved resilient in mid-June. A sustained break below $500, particularly on heavy selling volume post-earnings, would indicate a bearish reversal and could lead to retesting the $450 to $460 area, which has historically provided support. The analyst expectations for earnings per share of $3.38 and revenue of $73.8 billion are the precise figures to compare against the actual report. Beyond the headline numbers, pay very close attention to Microsoft's forward guidance on its cloud and AI segments and, importantly, details on its capital expenditure plans for AI infrastructure, as these will signal future growth trajectory and commitment. Increased volatility is almost certainly on the horizon for after-hours trading today and tomorrow's market open, making robust risk management strategies absolutely paramount for any trades. Always remember, trading involves inherent risks, and this analysis is purely for educational and informational purposes. Conduct your own due diligence before making any investment decisions. Thank you for watching Explain the Charts, and be sure to subscribe for more in-depth analyses to help you navigate the markets.